What if I told you there's a stock right now that could create more buzz than AMC and GameStop combined? Remember the chaos of the meme stock era, the massive rallies, the short squeezes, the millions of retail investors flooding in? Well, history may not repeat itself exactly, but it often rhymes. And this time, it's not about movie theaters or video game retailers. It's about a company at the very center of how people travel and experience the world. That company is Opendoor Technologies, ticker symbol OPEN. And today, we're going to break down why some investors believe Open stock could become even bigger than AMC and GameStop. So let's start with the basics. Opendoor is a digital real estate platform, a company that's trying to revolutionize how people buy and sell homes. Instead of dealing with traditional agents, endless showings, and complicated paperwork, Open's platform lets you sell your home instantly and buy a new one with ease. Now you may be thinking, that sounds interesting, but how does this connect to AMC and GameStop? The connection lies in the potential for high retail investor interest, massive volatility, and the possibility of sharp price movements. Back in 2021, AMC and GameStop weren't rallying because of their business models. They were rallying because of community-driven investing. Retail traders, largely on platforms like Reddit, saw an opportunity to push back against Wall Street short sellers. Today, Open is in a unique position. The stock has been beaten down, heavily shorted at times, and yet it's tied to one of the largest markets in the world, real estate. If retail traders decide to rally around it, Open stock could easily see meme-like behavior, potentially even larger than what we saw with AMC and GameStop. Now here's where things get even more interesting. Real estate is a multi-trillion-dollar market. Unlike AMC, which was tied to the declining movie theater industry, or GameStop, tied to physical gaming retail, Open is positioned in a space that affects nearly everyone: housing. Every family, every investor, every city relies on real estate. And if Open successfully disrupts the traditional way of buying and selling homes, it could unlock enormous value. That's a far bigger addressable market than what AMC or GameStop ever had. But let's be real, no stock is perfect. Open has had its fair share of struggles. Rising interest rates, falling housing demand, and shrinking margins have all created massive headwinds. The company has reported losses in recent quarters, and many Wall Street analysts remain skeptical. However, here's the flip side. Beaten down companies are often the exact playground retail investors love. Why? Because a low share price plus high short interest can create the perfect storm for explosive rallies. This brings us back to the AMC and GameStop comparison. Both of those stocks skyrocketed because of short squeezes, moments when hedge funds betting against the stock were forced to buy back shares at higher and higher prices. Open stock has, at times, carried significant short interest. Combine that with low trading volume and high retail attention, and suddenly you've got all the ingredients for a squeeze. So the big question is, could Open become the next meme stock phenomenon? The answer is yes. It has the setup. Retail investors love three things: a big market opportunity, and real estate is about as big as it gets. A beaten down stock, Open has traded far below its highs. The chance to stick it to Wall Street, just like with AMC and GameStop, investors may see Open as a chance to flip the script. And remember, social media platforms like Reddit's Wall Street Bets and TikTok investing communities thrive on stories. The idea of a digital housing disruptor rising from the ashes of Wall Street doubt is a story tailor-made for retail hype. So where could Open stock go from here? It depends on two major factors: market recovery in housing. If interest rates stabilize and demand for homes picks back up, Open's business model becomes more sustainable. Retail investor momentum. If online investing communities rally around Open, we could see rapid, unexpected price surges. But here's the kicker. Even without a meme-driven surge, if Open executes well in the long term, it could still become a legitimate growth stock, something AMC and GameStop never truly achieved after their rallies. Of course, no discussion is complete without looking at the risks. If housing stays weak, Open may continue burning cash. If retail hype fades, the stock may not see any significant upside. And if regulators tighten rules around meme stock style trading, that could also limit the potential for another AMC or GameStop situation. So yes, while Open stock has big potential, it's still a high risk, high reward play. At the end of the day, Open is a fascinating story. It has the massive market potential that AMC and GameStop never had. It has the volatility and short interest setup that could trigger wild price action. And it has the kind of story that retail investors love to rally behind. So, could Open stock be bigger than AMC and GameStop? Absolutely. The pieces are there. It's just a matter of whether the community chooses to ignite it. If you found this breakdown helpful and want to stay ahead of these kinds of stock opportunities, make sure to hit that like button, subscribe to Dividend Dreamer, and turn on notifications so you don't miss the next big market move.